Hello, everyone. I'm Lauren Moon. I'm here with Jonathan Ting. We are checking in this Tuesday, first day of fall, to tell you about our latest thoughts from our investment committee um, and hopefully have some helpful discussions regarding the market volatility over the last few days. So, to start off, for those of you that watch things closely, Friday and Monday, we had some fairly significant pullbacks in the market. We dropped below this key kind of resistance level, at least momentarily. Today we have a little bit of relief. Jonathan, what do these movements say to you, if anything, about our current environment?
Thanks, Lauren. Regarding what this past move over the week says about our current environment, I don't think it says much, actually. So 3 weeks ago, we had that strong run up in stocks, and now we have that strong pullback. But if we look at the other asset classes like high yield bonds or investment grade bonds, those never followed the path of equities. They remained rather flat this whole time. So this pullback is really sort of an equities only sell off that's going on when equities got a little stretched. So what does it say about the market and the direction it's going as a whole? I don't think it says much. Now, maybe there might be some more risk in the market given we're moving closer towards the election, and we're moving towards into the winter where we might expect COVID cases to rise up again, or maybe the stimulus is getting pushed out a little bit. But these are things that the market knew already 2 or 3 weeks ago. So really, this pullback, in my view, has been technically driven. Really just based off of prices getting way out of hand in a short period of time and pulling back to a more sustainable level.
Great, thank you. The other thing I'm wondering, as most of our clients and viewers probably know, you run Mirador aggressive growth strategy, and you're also very involved in how our other strategies are positioned as a whole. I'm curious, kind of going into the rest of the year, if you are thinking about changing how you're positioned now, kind of how you're viewing how the strategies are as they currently stand. They're fairly balanced and have been all year, even in the more aggressive strategies. Do you see us making changes to that in the near term?
Well, I'll talk about mags and how I see that changing over the next couple months because I manage that strategy, and it will reflect how I feel about how things will change as well. Is that depending on how strong this pullback is this time around and how long it lasts, we may take this as the opportunity to get out of some of our hedges that we've been in for the past year and a half almost, and start deploying the capital more into equities. And I really do think that moving into 2021, that's going to be the time to get risk on, and that's going to be the next bull market that we see. Um, if we look at and what factors would push that thesis, well, one is there is no reason there's not going to be a second resurgence of the virus in Q4. We're seeing that in the European countries and some of the APAC countries where they had their first wave. They're going through their winter now, and the second wave is even stronger than the first. And as a result, we're seeing some cities like Madrid reconsider citywide lockdowns. So if that second wave happens in the United States, there's no reason why, if there is an administration change, we wouldn't see more widespread lockdowns across the U.S. too, and that will definitely have an effect on asset prices and default rates, and it would push more stimulus into the system, which brings us to the second factor, which would be stimulus. We were supposed to get the second part of the CARES Act, a month and a half ago, but Congress has dragged their feet. If we do see more shutdowns, if we do see the economy slow again, that could force Congress's hand to push in more stimulus. In parallel, we also have the vaccine, multiple vaccine trials, coming close to an end, and I'm rather optimistic about those. So on one aspect, we have the economy slowing down with the resurgence of COVID, and we also have massive amounts of stimulus along with a vaccine. which
Mhm.
should put an end to the COVID sooner or later, and that would sort of push inflation
Mhm.
really high. So, looking into Q1, Q2 of next year, this inflationary environment and this work from home, we're going to get over that fast, and it's going to be back to, business as usual. Um, COVID's in the rearview mirror now, and long end of the rates are going to push up again. And I think that's going to be a tailwind for some of the industries and sectors that have really been hit hard over the past month.
Yeah. You mentioned that some of those sectors you particularly like are industrials and some select cloud companies that may have been looked over.
Yeah, so the industrial sector is a good example. They're going through a tough time right now, but if we do get that reflation trade back, we should see some of those valuations bounce back and default slow down. In the cloud software sector, uh, because that sector has run up so hard, and there are names that are constantly in the news. Um, Investors are sort of reallocating capital out of certain names and into those hot names that are running up fast. So there's definitely not just the tale of two cities in the equity markets as a whole, but even within cloud software, there's a tale of two cities where some are just going through the roof, and others are just getting left behind. Some of those left behind ones, they're still in long-term secular growth trends. Um, and they're run by great management with a great balance sheet and will continue to grow. So uh, we like those companies, and I'm keeping an eye on a lot of those.
Great.
Yeah,
Thank you, Jonathan. We're lucky to have you. And I would be remiss not to wish you a happy birthday as
thank you. I would add though, um, uh, given we do see this reflation coming back in Q1, Q2, we also have to balance that with the idea that where equity prices and valuations are right now, that reflation trade could be bad for asset prices. The economy will come back, and I think we'll be in the new bull starting next year. But that might not be the same for equity prices if we get inflation. So that's something that we have to balance as investors as well. It's okay. The economy is, during this time, the economy is not doing well, but prices are going up. Well, we might get into a period of time where the economy is doing well and prices are not going up. But that's a separate discussion.
well, and I guess to that I would say that just further enforces how we are approaching things in terms of maintaining those hedged positions for now, maintaining a balanced allocation, and looking for um, opportunities where valuations have not run as much as the rest of the market. So, all right. Well, let's leave it at that. Thank you, Jonathan. As always, to our listeners, feel free to reach out with any questions. Let us know if there are topics you'd like to hear us talk about specifically, and we will be back next week. Bye, everyone.